Today we're diving into a subject that I am very passionate about, and that's personal finance. But don't click away yet because this isn't your typical finance video. We're not just talking about budgeting or saving, we're going deep into the nitty-gritty of the financial system. You know, the things they don't teach you in school. We're talking about things like inflation, recessions, interest rates, all the things that seem complicated but actually make a huge difference in your financial life. Because when you understand how money works, you can make it work for you. So whether you're just starting out on your financial journey or you're a seasoned investor, this video is for you. So sit back, grab a notebook, and let's get started. Alright, let's kick things off with a topic that's been on everyone's minds lately: inflation. It's a term that seems to pop up everywhere, from news headlines to casual conversations. Now, I'm sure you've heard the term thrown around, but it's important to understand its real impact. So what does it really mean for you and your money? How does it affect your day-to-day life and long-term financial health? In the simplest terms, inflation is the rate at which prices increase over time. It's like a slow, invisible tax on your money. And trust me, it can be a silent killer for your savings. You might not notice it immediately, but over time, it can have a significant impact. Think about it this way. Let's say you have $100 today, and you decide to bury it in your backyard. Not that I recommend that. With an average inflation rate of, say, 3%, that same $100 next year will only buy you what $97 worth of goods would buy you today. In other words, you technically lost money. Your purchasing power has decreased, even though the amount of money you have remains the same. Over time, even small rates of inflation can eat away at your purchasing power. It's like a slow erosion of your financial stability. That's why it's crucial to invest your money in assets that have the potential to outpace inflation, like real estate or index funds. These investments can help protect your money's value. Inflation can also impact your wages and investments. If your investments aren't growing at a rate that outpaces inflation, you're losing money in real terms. If your income isn't keeping up with inflation, you're essentially taking a pay cut every year. It's crucial to be aware of this and plan accordingly to safeguard your financial future. Now let's talk about another big one: recessions. We hear this word all the time in the news, especially lately, but what does it actually mean? A recession is basically a period of significant economic decline, typically marked by a decrease in GDP, rising unemployment, and a slowdown in business activity. Think of it like the economy catching a cold. Things slow down, people get laid off, and businesses struggle. Recessions can be triggered by a number of factors, like a stock market crash, a bursting housing bubble, or even a global pandemic. Sound familiar? During a recession, you might see your investments lose value, your job security decrease, and it might be harder to get a loan. It can be a scary time, but it's important to remember that recessions are a normal part of the economic cycle. Having an emergency fund, diversifying your investments, and living below your means are just a few strategies that can help you stay afloat during tough economic times. Next up, let's talk about interest rates. Now, this might sound boring, but trust me, it's anything but. Interest rates are basically the cost of borrowing money. When you take out a loan, you pay interest on the amount you borrowed, and when you deposit money in a savings account, you earn interest on your balance. When interest rates rise, like they have been recently, it becomes more expensive to borrow money. This means higher monthly payments on things like mortgages, car loans, and credit card debt. And if you're not careful, those higher payments can really eat into your budget. But it's not all bad news. Rising interest rates can also be good for savers. The key takeaway here is that interest rates can have a big impact on your finances, both positively and negatively. Okay, I'm going to get real with you for a second. I know financial news can seem boring, but here's the thing: it doesn't have to be. And more importantly, staying informed about what's happening in the financial world can actually make a huge difference in your life. Think about it like this: financial news is like the weather forecast for your money. Just like you check the weather before you leave the house, you should be checking the financial news to see what's going on in the markets and the economy. Now, I'm not saying you need to become a Wall Street expert overnight, but even just spending a few minutes each day reading financial news websites, listening to podcasts, or watching YouTube videos like this one can make a world of difference. Alright, let's face it, economic downturns are a fact of life. But the good news is that you don't have to be caught off guard. There are things you can do right now to recession-proof your finances and protect yourself from the worst of it. First things first, build that emergency fund. I know, you've heard it a million times. But seriously, having 3 to 6 months of living expenses saved up can be a lifesaver if you lose your job or face unexpected expenses. Next, take a look at your debt. High-interest debt, like credit card debt, can really weigh you down during a recession. Focus on paying down those debts as quickly as possible to free up more cash flow. Okay, let's zoom out for a second and talk about the global economy. I know it sounds complicated, but it's actually pretty simple. Global trade is basically just countries buying and selling goods and services from each other. Think about it like this. You probably buy products from all over the world. Clothes from China, coffee from Brazil, electronics from Japan. And those countries are buying products from the US too. When trade is strong, it can lead to economic growth and job creation. But when trade slows down, it can lead to economic downturns and job losses. So it's important to stay informed about what's happening in the world and how it might impact the global economy. Alright, let's get practical. What can you do right now to feel more financially secure, no matter what's happening in the economy? Here are 7 actionable tips to help you navigate any economic situation. First and foremost, live below your means. This is crucial. This means spending less than you earn and saving the difference. It's a simple concept but often overlooked. Sounds simple, but it's the foundation of financial security. Next, invest in yourself. This is one of the best investments you can make. Whether it's learning new skills, starting a side hustle, or getting a higher education, investing in yourself can pay off big time in the long run. The more you know, the more you can grow. And speaking of investing, don't be afraid to put your money to work for you. Let your money grow. Investing in the stock market, real estate, or other assets can help you build wealth over time. Diversify your investments to spread risk. Also, make sure you have adequate insurance. This is your safety net. This includes health insurance, car insurance, renters or homeowners insurance, and life insurance. Each type of insurance serves a different purpose. Insurance can protect you from financial ruin in case of an accident, illness, or other unexpected event. It's better to be safe than sorry. Another important tip: build multiple streams of income. Diversification is key. This could be anything from a side hustle to rental income to dividends from investments. The more sources, the better. Having multiple streams of income can provide a financial safety net if one income stream dries up. It's all about creating stability and security. Chapter 8. The stock market. Explained. The stock market. It can seem intimidating, right? But it doesn't have to be. At its core, the stock market is simply a place where buyers and sellers come together to trade shares of publicly traded companies. Think of it like a giant auction house for businesses. When you buy a share of stock, you're essentially buying a tiny piece of ownership in that company. And just like any other investment, the value of your stock can go up or down depending on a variety of factors. Now, there are a lot of different ways to invest in the stock market, but one of the simplest and most effective is through index funds. Index funds are like baskets of stocks that track a particular market index like the S&P 500. Chapter 9. Currency exchange rates. What you need to know. Have you ever traveled to a foreign country and had to exchange your money for the local currency? It's a common experience for many travelers, and it can sometimes be a bit confusing. That's because different countries use different currencies, and the value of those currencies can fluctuate against each other. These fluctuations are influenced by various factors including economic stability, inflation rates, and political events. These fluctuations are known as currency exchange rates, and they can have a big impact on your finances, especially if you travel internationally or invest in foreign markets. Understanding these rates can help you get the most value for your money. Here's how it works. Let's say you're traveling from the US to Europe, and the exchange rate is $1 to 0.85 euros. This means that for every US dollar you exchange, you'll get 0.85 euros. This means that for every US dollar you exchange, you'll get 0.85 euros. However, exchange rates are not static and can change frequently. Now, if the exchange rate were to change to $1 to 0.90 euros, that would mean the US dollar has strengthened against the euro. This is good news for travelers from the US because they'll get more euros for their dollars. This is good news for travelers from the US because they'll get more euros for their dollars. More euros mean more spending power while you're abroad, allowing you to enjoy your trip even more. On the other hand, if the exchange rate were to change to $1 to 0.80 euros, that would mean the US dollar has weakened against the euro. This is bad news for travelers from the US because they'll get fewer euros for their dollars. This is bad news for travelers from the US because they'll get fewer euros for their dollars. It means less spending power and potentially higher costs for your trip. Currency exchange rates can also impact the cost of goods and services. If the dollar is strong, imported goods become cheaper, making it more affordable to buy products from other countries. If the dollar is strong, imported goods become cheaper. This can be beneficial for consumers looking to purchase foreign products. Conversely, a weak dollar makes imports more expensive. This can lead to higher prices for goods and services that are sourced from abroad. Understanding these fluctuations can help you make better financial decisions. Whether you're a traveler, an investor, or a consumer, keeping an eye on exchange rates can save you money and help you plan better. So keep an eye on exchange rates, especially if you're planning to travel or invest abroad. Being informed can make a significant difference in your financial outcomes. Chapter 10. Financial Literacy, Your Secret Weapon to Wealth. Alright, we've covered a lot of ground today, but there's one more thing I want to talk about. Financial literacy. Simply put, financial literacy is the ability to understand and effectively use various financial skills, including personal financial management, budgeting, investing, and more. And here's the thing, financial literacy is not a luxury. It's a necessity. In today's world, it's more important than ever to have a strong understanding of personal finance. The good news is that it's never too late to start learning. Trust me, investing in your financial education is one of the best investments you can make. That's it for today's video, guys. We covered a lot of ground, but hopefully, you found this deep dive into the world of finance helpful. Remember, understanding these concepts is crucial for building a solid financial future. If you're ready to take control of your finances and start building real wealth, hit that like button and subscribe to the channel for more videos like this one. And as always, thanks for watching. I'll see you in the next one.